Welcome to Gradient's weekly business roundup. Today's episode will cover the following topics. In a bid to improve reserves and stabilize the foreign currency, the central bank announced that companies can now invest in international sovereign bonds, shortly referred to as ISBs, with approval of the Monetary Board, utilizing 50% of the foreign currency borrowed from a person resident outside of Sri Lanka, subject to the following. The balance 50% of the foreign currency borrowings shall be invested in the Sri Lanka development bonds, shortly referred to as SLDBs, issued by the government of Sri Lanka. Investments in ISBs and SLDBs shall be made exclusively out of the foreign currency borrowings received as inward remittances to Sri Lanka. All inward remittances with respect to the ISB and SLDB investments should take place via an external commercial borrowing account opened and maintained with authorized dealers in Sri Lanka. Income received from the investments shall be credited to the same external commercial borrowing account through which the initial investment was made. The borrowings repayment schedule shall be matched against the receipt of coupons and maturity proceeds of the corresponding investments in ISBs and SLDBs, and it shall not be made out of Sri Lanka rupee conversions into foreign exchange. Further, authorized dealers shall always ensure the due diligence and compliance to the regulations by the eligible companies. Sri Lanka will obtain up to $800 million worth of reserves from the International Monetary Fund under the Special Drawing Rights Facility during August to September of this year. This is not a new agreement, but a facility that countries can access to improve liquidity and reserves during times of economic crisis. Citi Research, in its latest report, noted that the Sri Lankan government can hold out timing of any IMF negotiation until 2023, given that the locals' holdings in ISBs is larger than expected $2.2 billion. This is an improvement from the December statement, which stated that Sri Lanka's debt status is on an unsustainable path, with IMF intervention inevitable in order to avoid a debt disaster. The new Citi Research report also states that Sri Lanka's foreign exchange reserve forecasts for 2021 seems conservative but overly optimistic beyond this period, considering that the central bank's current account forecast projects a surplus after 2021. To encourage entrepreneurs to disclose and invest, the Sri Lankan government published a tax amnesty bill allowing investors with undisclosed income or assets to be indemnified against investigation or prosecution for tax liabilities. Such relief is only granted should they invest an equivalent amount to the undisclosed income or assets in shares of a resident company, quoted debt securities, and/or any movable or immovable property in Sri Lanka. Such investments are to be made on or after the date of commencement of this Act and prior to 31st December 2021. If a person is to disclose taxable income or assets other than immovable or movable property, such persons are only liable to pay a 1% voluntary disclosure tax on the amount of income or on the cost of such asset or any immovable or movable property. Compared to the negative growth of 1.8% in the first quarter of 2020, the Sri Lankan economy grew by 4.3% in the first quarter of 2021, supported by growth in all three key sectors, which are agriculture, industry, and services. The services sector, the largest segment of the economy, grew by 3%, whereas the agriculture and industry sectors rose by 6.1% and 5.5% in the first quarter of 2021. The central bank revised down its full year 2021 growth projections to 5% from 6%. The Sri Lankan government is to give one-year visas to digital nomads, identified as a fast-growing segment within the global travel and tourism landscape. Last month, the French travel and tourism operator Club Med ranked Sri Lanka as the second best destination for digital nomads in the world in 2021. The Colombo Stock Exchange saw net foreign outflows of Rs 3 billion within 17 market days, with year-to-date foreign outflows reaching a significant Rs 29.8 billion. However, the market remains positive, with the ASPI gaining more than 2% over the last week. Sunessa Development Bank will be offloading a 10% stake to Belgian firm Belgian Investment Company for Developing Countries, shortly known as BIO, for a value of Rs 925 million via a secondary public offering. BIO is a development financing institution fully owned and funded by the Belgian state. Moreover, the International Development Finance Corporation shortly referred to as DFC, gave USD 150 million in credit to Sri Lanka's DFCC Bank to refinance small and medium-sized industries linked to women. Further, the DFC approved a USD $75 million credit to NDB Bank, also to focus on supporting women-led enterprises. And that's a wrap for today. Hope you have a great day. Stay safe and stay healthy. This video is co-produced by Gradient Alliance and information design firm Atheno.